credit growth is slowing. It's around 5%. It's certainly not looking to change in the next 3 to 5 years, and there's a lot of reasons for that, but locally within Australia and globally that's the case. So the appetite for assets is both at a corporate bank and a consumer level is quite muted. The other fact is the fact that we all of us in this room and 22 million Australians out there follow the same life cycle in terms of their financial needs. So we save, we transact, we borrow, we invest / protect, and we retire. Another fact is what's happening in consumerism. Consumers are becoming more and more demanding. They want access. They want a relationship with a trusted advisor. So when you throw all of those together, and the fact that in Australia, retail mortgages, which are a significant investment for consumers, delivered 1 and 2 through the broker channel, and the fact that borrowing comes relatively early in that life cycle, it makes a lot of sense for me that brokers should be leading the charge in terms of providing a more holistic or a converged financial services model to their customers.
Our opinion on it, Ben and I don't believe that we're going to be the main contact for that client for everything of their financial life and everything of their financial needs. We believe in having the right people within our firm to be the right contacts for that consumer. So basically anything anyone needs around the financial planning side, we've got David Sear and his team who will look after them. That's FYI financial planning, not Ben or I or Shane or other broker. Basically anything for the lending point of view, Ben and I can look after, and Shane looks after the commercial as well. So we really specialise and keep our specialist hat on, which I think is super important as well, David. We also can refer to the FYI property division, which is our real estate side. So we have, I believe, the best opportunity for a broker is not to try and do it all yourself. I think the best opportunity for a broker is to just partner with the right people or bring them in-house if you can. Make your brand be that complete financial services model for your client. So anything that client needs around finance, property, financial planning and advice, they can get within the white picket fence of your firm.
What I try to basically get is a really good perspective of whatever a client may require in the financial life cycle that is being discussed here. So the most important thing is really to understand the bigger picture. Okay, when I deal with a client, I start from the very, very top. Starting from the very top is really a holistic approach to financial needs, not unlike what Lisa and Sam basically mentioned. I just do it a little bit differently because my practice is not a very large practice. I tend to focus on individuals that have specific needs, and they tend to be those who are past their initial first home owner requirements, etc. So they will be basically accumulators or even prior to retirement, and their financial needs are very, very specific. What they need to do is obviously put a holistic approach into whatever they want to do. So typically they will look at what type of investments they should actually get into, whether or not they want to do it with a self-managed super fund. There's a lot of options there. So in a way, you have to really understand, a lot about insurance, a lot about superannuation, a lot about investments, a lot about finances, etc. However, it is not very specific as to say, well, we specialize in finance, because we don't, We specialize in holistic advice.
We've seen vast changes. So when my business partner Jason Nelson and I left the banking arena in 2002, we were ex-private bankers. So one thing that we wanted to sort of develop on the outside of the bank is a private bank nature. And so slowly and progressively we did that initially through niche lending, doing your commercial and your residential type lending. Then we slowly brought on the financial services more on a quiet type basis. But of late we've really gathered momentum in terms of the financial services and the financial planning and the risk side by, number one, putting a financial planner within the office. We've got 4 brokers now within the Sydney office, plus a financial planner in Sydney. My business partner Jason moved to Queensland for both business and pleasure reasons. So he's permanently up there, but he's establishing an office now in Queensland, Sunshine Coast or Brisbane, wherever he wants to be. And we, just before the 1st of July, we acquired an office in Adelaide, which he was assisting us with the financial planning. But we took over his business and he's now part of our business. So there's an office now in Adelaide for Niche Financial Group. And that's how Niche Financial Group evolved, was that we brought together niche lending and niche financial services under the one umbrella. So now that we've got 7 brokers within the group, 3 CBD office sites within Australia, 4 financial planners. We've just introduced niche accounting, which now again involves the understanding of bringing together the lending, the financial planning, because the accountant is the one that actually also directs the traffic.
Look, I think the whole converged model is definitely the model of the future. If you look at consumers, and Lisa mentioned consumerism, they're time poor, so they want more immediate assistance and they want a broader piece of the assistance. So it's been really interesting to hear validation of our own views of the way your businesses are set up, is that when a customer comes to see you, you don't just offer one practical solution, and you don't just say to them at the time, if they want a mortgage, yes, I can help you with the mortgage, but you build on the foundations and the pillars of the brand, so they understand that we are not just a partner in the short term, but we're a partner in the long term. And I think the beauty of it is, even your business, and you mentioned the fact that not all of them are necessarily first home buyers, but the referral opportunities that you have within your customer base is endless, right? So you've got that power of advocacy and reputation and referral. So you might find a lot of your transitioning to retirement customers will be referring their sons and daughters and nieces and nephews back to you for the first home buyer. So I think those models are definitely the models of the future. There's clearly different levels in terms of whether you have everyone under the one shop or whether you have a contracted referral program. There's different views around the industry, and I think my personal view is that co-brand, co-location, strong model is definitely the way to go. And I sit back and we have some conversations ourselves and we think, when will the day be that it's no longer a discussion about a mortgage broker or a financial planner, that there's a true convergence in terms of a true financial advisor, financial specialist, because essentially that's what you are.
I think for the majority of brokers who aren't going or willing to at least maybe venture or investigate those avenues are going to find it very hard in the near future.
The point is, David, that you're prone to competition. So if a consumer takes just the mortgage with the sole operator from a broker perspective, but then they come across the insurance, they come across the wealth, they come across the conveyancing elsewhere, and they're then dealing with people that can provide all of those services under the one roof or within a professional network, that's when you're at your most vulnerable. So you can be very successful and you can have a very solid client base today, but behind the scenes that client base has been slowly eroded, and I think that's the real damage.
If we look at maybe the traditional mortgage broking model, I think it's under a lot of pressure, and I see it under a lot of pressure from 3 different maybe channels or avenues. One, legislation, compliance becoming very, very difficult to deal with on a regular basis. Number 2 is human opportunity in terms of what you want to do with your client. I think competition is very, very significant, and the banks would like to actually get your clients to come to them for all the services that they can actually offer you or offer your clients.
The trends I'm seeing is that certainly there are profound shifts going on in distribution amongst the channels of direct, branch and third party. The good news is that third party is predicted to increase. Direct is not surprisingly predicted to increase for some product issuances. The tends towards the less complex products. There's going to be a shift. So earlier in that life cycle, those transacting, saving, seismic shift to direct distribution. As we go through that life cycle and product becomes a little bit more complex and the stakes get higher in terms of money, third parties coming into the play. The loser in that I can see, particularly from the European experience, is definitely the branch-based distribution. It's not disappearing, but we're seeing in other parts of the world, Hong Kong, some in Asia actually, the reconfiguration of the branches, so becoming way less transaction because that's all going online. They're completely transforming themselves. But unless again they shift, they will become increasingly obsolete.
My business partner Ben and I always believe that the best brokers come from banking backgrounds, but basically, forgive me if anyone is not all banking background, but look, there is obviously a huge emphasis on mentoring. Ben and I are looking at someone at the moment that we've got to mentor and bring through the system. To make it easier for them is basically the platforms and the systems that you have in your business and the people that support you in your business in their roles to make that transition as seamless and as easy as possible for that new entrant. It comes down to that new entrant is not just about writing a home loan. That new entrant isn't just about that transaction. As we know, that new entrant that we're actually negotiating with at the moment is someone that can come into our firm and can make money from that client meeting their needs for that transaction and that home loan, make money from having them referred to the financial planning department to look after them for the super and the risk. They will make income from referring that client through to the property management side and have the property managed through the firm, and then also any of their equipment needs and commercial needs and things like that. So it's very important that bringing a new entrant into the industry, you're actually moulding them into what you would see as your typical firm, moulding them into identifying every opportunity for that customer, because that customer, whilst it's about the transaction initially, it's actually a lot more than that for their full financial life.
We are looking for lenders from banks, but I think what we're also looking for is that particular type of broker who is good in what they do in terms of their residential or probably even their commercial, but that hasn't grasped the idea. And there's a lot of brokers out there that haven't. And then in fact there was a broker in the Advisor magazine saying that referrals is not the be all and end all. So it's quite ironic that he's coming out and saying that in the sense that you are going to get this migration of those brokers moving across if the respective current aggregator doesn't have the ability to provide that.
There's no doubt that we're amidst a technological revolution, particularly being led by mobile. However, we've got to remember technology is an enabler, and what we've all been speaking about today is the predominance of the relationship. So, technology is not a threat to that need, that consumer need to have a relationship with a trusted advisor. But what we are seeing is that smart people are harnessing the technological evolution in various ways, whether in terms of increasing their efficiency, automating low-value transaction, using technology, you mentioned Sam, CRM tools, using it in that way. The other significant area that technology is playing into is in social media. Particularly in this business, we know that referrals are the cornerstone of your existence, and social media, so the ability to transmit your opinions about anyone or anything at any time has been magnified and intensified by social media, whether it's on your desktop or your mobile phone, Twitter, Chatter, all blogs, whatever. So as a trusted advisor, you cannot have your head in the sand.
We've done a lot of work on the social media side recently, especially website. Facebook's been a major tool for us recently. I know everyone cringes when you hear that, but Twitter, we're doing a little bit of that too, which is probably not as high on our, I guess, dial than the others. But you definitely look that everyone will research you and your business from some sort of technological kind of way, I guess, in the website, the Facebook side, if you're referred by a friend or you whatnot, and they want to know about you and who you are. They're not just going to, like, I mean, obviously the referrals is where we get our business, but the referrals, or the person coming to us still wants to know who we are.
You need to have a presence where people can find you easily and research you and know what you're on about. So you need to have a web page. You need to, a Facebook page is important, because time and time again I hear clients saying when they meet me, they walk straight up to me, and the reason why is because they've Googled us, they found us, very easy to find us on the web, which is important. They send a photo of me, so they know exactly who I am, which is really, really important, that technology brings that little bit of warmth, a little bit of comfort for them. I know who you are, I know I've found you. Now I see in your office and your operation, I feel a part of something. I think technology will actually bring clients, especially the younger generations, closer to us. And on the young generations, they actually think that they can do a lot of it themselves. When they start getting into it, they actually realise they probably do still need someone in a relationship. And as long as we're close enough to them in the technology, and that they can access us how they choose to, but through the internet, then we will win those young people as well. We won't be left aside.